Hello everyone, welcome again to the daily market updates video, where I talk about today's market action, my key learnings and insights that I learned today, and also my forecast going forward. So without further ado, let's jump on to the analysis because I have a lot of things to talk about today. So, as you know that we do the top-down approach in our analysis, starting from the weekly, then daily, and then intraday analysis. We also try to cover some important events like news events or any earnings announcements or any macroeconomic events and their impact on the markets. So let's start our analysis with the weekly time frame. So this is the weekly chart, and I wanted to highlight three important things in the weekly chart. The first is, as covered in the yesterday's video, we are still chopping around in this range, that is the green box, which also happens to be the golden ratio of the Fibonacci pattern. The second is, if you can see very acutely over here, the Bollinger Bands on the weekly time frame are acting as a support as of now. Also, the third thing that I want to mention, which is really concerning and important for the weekly time frame, is we are right now building below the 26-day moving average. Now, if we close this wick below the 26-day moving average, that is the red line that you see over here, that will be a very concerning sign, because then we will get a crossover, that is a bearish crossover signal on the weekly time frame. So as long as we are above this red line, it's completely fine. But if we close the week consecutively at least 2 weeks below the 26-day moving average, then that would be a very concerning sign, and that would signify a confirmation that the market sentiment is going to be bearish. So now let us draw our attention to the daily time frame. So these are the important points that I wanted to discuss on the daily time frame. So right now, let us jump in to the charts. So this is the daily time frame chart, and as you can see, we are beautifully holding the pink line, that is the 200-day moving average. So we lost it last week, we reclaimed it on the Friday, and then from Monday and Tuesday, we are holding that 200-day EMA support on the daily time frame. The second observation, that is a very key observation that I did on this week, is to show you, like if you see over here, the price is taking a support at 200-day EMA. At the same time, it is bouncing, but the volume is decreasing. So if I take my brush over here, you can see that the price is rising and you can see that the volume is decreasing. So what is this? This is basically a divergence wherein price is moving in one direction and it is not being supported by good volume. So for example, if somebody believes that the thesis moving forward is going to be bullish, then why is it not supported by the volume? So if there is a heavy buying volume in this zone, then we can be double sure that the bullish thesis is going to sustain. So the foundation has to be in the volume. Now, it can be true that, there are no big news events on these days, and that is why the volume is lower. But I just wanted to bring this to your attention that the bounce that we got from Friday, Monday, and Tuesday is not supported with the heavy volume that was present prior to the selling days. So over here, you can see 820,000. Over here, you can see 980,000. These are the number of contracts being traded every day. So it is gradually decreasing in the bounce days. So this is a classic case of divergence. So this was the important observation that I did today. Also, the next point that I wanted to cover is, as you can see over here, let me zoom it out. So this is the top of the range that we discussed yesterday and Monday. So this top of the range, if we have to go higher or be bullish, then we have to close above this top of the range. So we have to eliminate the entire selling, the demand, we have to absorb that. But right now over here, as you can see, it's not being absorbed very easily. Also, over here, I wanted to show you a W pattern that I talked about yesterday. So let me have my brush. So over here you can see any bottom which normally forms in a W pattern. This is a technical analysis pattern, but it plays out very beautifully. So as you can see over here, near my mouse pointer, we formed a W pattern like this and like this, right? Also, you can see over here, when we formed a bottom in the October, we again formed a W pattern like this. And that is why I normally was very suspicious regarding this downfall, because we are still yet to form a W pattern. So right now we are in the middle. So over here and then this, and then I am hoping to have a small downfall and then move forward. So we have not got that W formation pattern yet. The catalyst for the next downfall can be two things. One, it can be Apple earnings, or it can be tomorrow's Federal Reserve meeting, wherein Jerome Powell is going to decide if he's going to raise the rates or not. So I will discuss that in detail as well, but I wanted to show you these things just to make sure and to explain it visually, that what is going on the daily time frame. So now let's jump on to the intraday time frame. So looking at the charts, so this is the intraday time frame. So when you see the intraday time frame, the main thing that I was waiting for today was the news events. So as you can see over here, there were a lot of news: house price index, consumer confidence, and Dallas Fed survey. So my game plan going into today was, I will wait till the consumer confidence report to come, so that all the news volatility goes out of the way, and then deciding on the levels and the entries. So as you can see over here, that is exactly why I recommend people to wait for 30 to 45 minutes into the opening session and then taking on the trades. So we opened on 6:30 Pacific time, and you can see that there was a heavy downfall, and not just heavy downfall, with the heavy volume. So as you can see over here, the first two candles were almost 18.5K candles. That means almost 18,000 contracts getting traded on a single 5-minute candle. And look the direction, it was on the downside. And look at where exactly it stopped. So that this is exactly why I use pivot levels. Now there are multiple indicators, and many of those indicators, almost more than 70-80%, are lagging indicators. But if you look at the pivot levels, the pivot indicator is it's not a lagging indicator. It's basically telling you in advance, like, what is the standard deviation of the price that it can go into the maximum. So the first standard deviation, that is the S1, many people also call it a support level S1. So we perfectly bounced from the support level S1. So if you see over here, I was waiting till 7 o'clock till the consumer confidence and other news events get over, and then wait for the confirmation. So as you can see over here, bounced on 7.5 with a very big candle, but still I waited. And then, because you can see over here that the conventional moving average bundle, that is 200, 150, 100, and then the 50-day moving average, everything was above. So I knew that the supply is above it. So until and unless I get a conclusive crossover, cutting across these supply zones, I'm not supposed to go long. So this was my game plan going into today. So what I saw was, after 7:30, we also got a really good downfall. And the problem was, we were not able to cut through and actually conclusively close above the P0 level, which happens to be ahead of all the moving averages, that is over here. So we actually did nothing till almost 9:30 Pacific time. So over here we just got chopped around. So I was just waiting for the breakout, either to the upside or to the downside. So finally, after 9:30, we got the EMA crossover. We closed above the P0 level. That was the exact moment when we were supposed to take the trade. So according to my strategy, I got a long call over here. So I placed a long position in the futures, and then I got out by almost 15-20 points. Had I waited till R1, I would have got a lot more money. But the problem is, always stick to your plan, stick to your strategy. So here, this is the perfect day to demonstrate the importance of pivot points and the importance of these conventional moving averages, like above which we don't have a lot of resistance and below which the same moving average will act as a resistance. So today, if anybody was long over here, he would have made a lot of money. But the thing is, we have to also see the daily chart to confirm that if we are the positions that we are taking is actually confirming with the daily chart. So going into today, I knew that the support level S1, if that holds, then and only then I can go long, because over here on the daily chart you can see that the S1 support level is very near to the 200-day moving average level. So if this was the day to lose the 200-day moving average, then I would be devastated. But here is where the experience comes into picture. So today, as you can see, after 7 o'clock, after the consumer confidence, we did not have a major news. We did not have macro news as well. So it was very evident that the rest of the day either would be stable or would be bullish. So in the intraday, it did make sense to buy at these levels because it consolidated for a really long time. It had the big candle accompanied with the big volume. So this was the indication that there was a lot of buying power present, and then it chopped around for a really good 2 hours and then it went ahead. So all the days are very, very peculiar, very, very specific. So once you have that screen time, you will be able to take these dynamic decisions. Also, I wanted to point out that our favorite VXN, that is the volatility index for Nasdaq, so that completely made lower lows and lower highs. So what does that mean? Lower highs and lower lows means a downtrend. So as you can see over here, VIX broke in the support at S1. It also did break S2. So basically this told me that if VIX is going down, then there is no volatility. If there is no volatility, then there is no reason for the market to go down. So also look at the daily levels. On these daily levels, VIX or the VXN took the support on the 200-day moving average and the red line, that is the 26-day moving average. So you can see over here, like VIX is coming down since 2 to 3 days. So that means the volatility is coming down. But on the contrary, the major moving average like 200-day and the 26-day and the 50-day are the VIX is approaching those support levels. So whenever a price approaches the support level, it is very evident that it will bounce. So as I discussed in the daily market section, the daily analysis section, that W formation is very, very likely to happen. So this is how I'm able to know, and these are the reasons why I'm telling what is going to happen. So our job as the traders is to take a calculative guess, and that calculative guess will depend on the data and the probability. So make sure that you maximize those data points so that you increase the probability of you being right. So this is the essence of trading, and by this, I conclude my intraday section. Now, I want to discuss and change the gears a little bit. So tomorrow there is a very important day for the Federal Reserve and for the American economy. Jerome Powell, our Fed chairman, is going to speak tomorrow. Basically, he is poised to pause the rates. So how do I know, right? So look at the Fed Watch tool. So this is the official CME, that is Chicago Mercantile Exchange website, wherein they give you the probabilities of raising rates or what's going to happen with rates. So as you can see right now, the American interest rates is sitting at 525 to 550 basis points. What does that mean? 5.25 to 5.5%. And there is a 97.1% chance that the rate is going to remain the same. So the rate hike is out of the table. Now, the press conference that he is going to do will have a major impact, because there he is going to make the statements either hawkish or dovish. What do I mean by hawkish? Meaning that he's going to be more stricter, more policy tightening is coming, or dovish, meaning that he acknowledges that the inflation is coming down and then he doesn't need to raise more. So that is the meaning of hawkish and dovish. So this is what I wanted to show, that I would highly recommend that tomorrow's session will be very volatile and very out of the range. So in any means, refrain from trading tomorrow, because tomorrow there is no value in trading. Why? Because the probability is not on our side. Avoid days like these where Fed chairman is speaking and then you are taking the trade and then you suddenly realize that it went against you 50-60 points. So tomorrow is the day to watch and learn and analyze and just think about what's going to happen and how it is going to happen. Also make a note of these important levels that I shared with you. Take time to reconcile and then again return on Thursday and start trading. So this would be my advice for going forward next week. So I covered intraday, daily, weekly, volatility, and also the economic events. So with this, I would like to conclude my video, and I hope you guys are having really good value in watching these videos. Let me know your feedbacks, and thank you for your time, and please like, share, and subscribe if you find value and quality content into it. Thank you.